Big Tesla stock news was confirmed this morning. Morgan Stanley is now choosing Tesla stock as its top pick. And you will want to click the like button right now because Tesla stock is up 5.6% today. And here's some more big news from Elon Musk directly. FSD 12.5.1 starts wide release today. Will it include hardware 3 cars though? No. It also needs to be validated separately and the estimated rollout is about 10 days. But wait, there's actually more. Piper Sandler says don't roll your eyes by Tesla stock. Why? Because they say Tesla may have solved the self-driving puzzle. We think investors should consider the possibility that Tesla's decision to host a robotaxi event isn't a ploy to distract from falling EV sales. Of course, many investors have grown accustomed to Tesla and Elon Musk exaggerating, but Piper Sandler says, judging by reviews on X, Tesla's update to version 12.5 is revolutionary. And they say Tesla stock is about to go to $300. Well, if that's true, that Tesla is on the verge of solving full self-driving, it's gonna go a lot higher than just $300 per share. I consider AI driver to be the most accurate describer of current FSD capabilities.
This is a giant leap forward in comfort, confidence, and consistency. It really truly is the best version I've ever tried in many regards. Instead of reacting to things, it's planning for them well ahead. This is by far and away my favorite update to full self-driving ever. And the craziest thing is, this is just the very first version of 12.5. The Tesla AI team should be extremely proud. The smoothness, the confidence, the decision-making is all just seriously next level.
I was blown away to receive V12 for the first time from V11. That was a major change. It was so much better. And now he says that is even better than that. In terms of the difference between V11 and 12.3, 12.4 might have disappointed some people, but 12.5 seems to not be disappointing anyone based on the first impressions. This is still not a robotaxi level FSD system, but if we can keep making these huge improvements like we have made from V11 to V12 and now to 12.5 supposedly, I haven't tried it yet, so I'm not speaking from my personal experience, but if we can keep doing that, full self-driving is coming, and it's coming soon, perhaps. Soon enough for Piper Sandler this morning to say, buy Tesla stock and don't roll your eyes. However, let me be very clear. This version is definitely not robotaxi yet. Dylan Loomis showed a few issues.
And there are cones, and it probably would have driven right through those cones.
And there's more, of course, but the software definitely got quite a bit better. Piper Sandler also says that they believe Tesla will sell vehicles for 0% gross margin, but ultimately, just like cheap flip phones, we don't think anyone will buy non-FSD cars. I know many were not happy with the earnings report, but full self-driving 12.5, I think it's making up for it. And there's also a clear path for Tesla's FSD to get better. Elon says there's an 8x untapped potential in hardware 4 in terms of parameters, and an increased parameter count is why this FSD version is working so much better, supposedly. This, however, means that all of the FSD updates will first go to hardware 4 cars and not hardware 3, and I have hardware 3. Although Elon said that hardware 3 would run the same parameter count, but requires extra work to optimize the code. So I do expect hardware 3 to not be as good as hardware 4 going forward with FSD versions, but this is nothing new really. Elon Musk before has said that hardware 4 eventually will work better than hardware 3, and that both hardware versions would be eventually safer than human driving, but hardware 3 maybe would be 3 times safer than human driving, and hardware 4 maybe 10 times or something like that. So at this point, it does seem obvious that full self-driving is basically done. It's just a matter of time. There's a clear path forward to how to solve it, and that is to increase the parameter count, improve hardware, and hardware 5 we know is already coming. Until 12.5, there was some room for interpretation. Now maybe Tesla already somewhat plateaued and it's going to be incredibly hard to make it even a tiny little bit better, but 12.5 is proving these people to be wrong. It sounds to me like we are getting pretty close to a real march of 9s. And at that point, it will be pretty difficult to tell which version of FSD is actually better, because maybe one version will take you 3 weeks to get an intervention and another version 4 weeks or 2 months. So you would have to drive for weeks and months to really know the difference from personal experience. At that point, really mostly just people that have access to fleet data will know how much better it's getting and how fast, which is likely when Tesla is going to start publishing intervention data. Right now, Tesla doesn't do that. But things don't stop at FSD. Elon said the future will be wild in reply to this post from Omar. I think Musk's estimate that robotics could be a $200 trillion market could be conservative. That accounts for 10 billion units at $20,000 a piece per robot. But then you got the software side as well, and there's going to be a lot of potential there. And here's perhaps one of my favorite pieces of news last week. Tesla, I believe, is going to be investing in XAI. Elon ran this poll, and by the time he runs a poll, it's pretty much a foregone conclusion. I think Elon really knows already what he wants and what he's going to do. And running a poll is not for the sake of, oh, should I do this or should I not? It's just to get further validation that he has permission from the public to do the thing that he already wants to do and the thing that he already decided to do. Of course, in the very unlikely case that the poll would have turned out to be unfavorable to him, maybe then he would reconsider and actually he will not go through with it. So it's not necessarily that before running the poll, Elon for sure 100% already knows what he's going to do. He just has a very good idea of what he's going to do. And it seems pretty clear to me that at this point, Tesla is going to be investing into XAI. I also suspect that Tesla is going to invest into XAI multiple times, not just once. And the thing that I really like is that no longer would we have the issue of, oh, is this engineer going to XAI? Wasn't he supposed to come to Tesla? Are these chips really how to go to XAI, or were they supposed to come to Tesla? No more of that. I'm looking forward to that day. We would have no more complaints of Elon Musk focusing on XAI, supposedly spending a lot of time there sometimes, and maybe not as much at Tesla, although I do believe that Elon Musk is spending quite a bit of time at Tesla. Now, Elon said a while ago that he would talk to the Tesla board about investing into XAI, and nothing has come out of it except this poll. So I wouldn't say that nothing came out of it. I think some of the people that said, oh, yeah, don't keep your expectations too high, I think that's not the most accurate approach to go about this. Things are already moving forward at this point. And I definitely prefer Tesla doing an investment into XAI instead of doing a Tesla stock buyback. I can buy Tesla stock myself. I cannot really easily buy XAI. That's so incredibly difficult. One big reason why it's a big deal that Morgan Stanley chose Tesla as its top pick is because in 2022 December, Morgan Stanley also chose Tesla as one of its top picks. You know, the moment when Tesla stock was close to the bottom, and then it rallied quite a bit. As you remember, back then, Tesla stock was also my top pick, my only pick. Although keep in mind that this time Tesla is chosen as a top pick in US auto, specifically replacing Ford. Before, it was one of the top picks for the whole year from all of the stocks. But the stock market is overlooking that and it's excited about this. Oh, by the way, did you see this? It appears that Tesla is running ads in China. Back to the Tesla note from Morgan Stanley. Why do they choose Tesla as their top pick now? Cost-cutting restructuring has stemmed the downside risk to the EV business. We found it notable that Ford management spent far more time on its Q2 conference call discussing EVs than Tesla did, cornering the market for EV credits. Tesla actually recognized more EV credits than normal in the quarter, $2,000 per unit sold, which is 2x the recent run rate. And they say with other companies pulling back, Tesla is likely to achieve an even better position when it comes to these credits. For example, Ford just agreed to purchase $3.8 billion worth of regulatory compliance credits in North America and Europe. And you know, a lot of it is going to go to Tesla. Morgan Stanley estimates that Tesla may account for as much as 1/2 of the credit sales in the market, meaning Ford is going to give about $2 billion to Tesla, and this business is, of course, with a margin of 100%, and Morgan Stanley believes that many investors are just not anticipating this properly. This business, of course, is not going to last forever, but for now, we'll take it. Managing exposure to China risks, Tesla's China-sourced revenues account for 18.2% of total Tesla's revenue. Morgan Stanley projects that by 2030, China will only account for 10% of Tesla's revenue. Many investors are worried about China, so this makes them feel better. Increased contribution from recurring services revenue. It increased 21% year over year. They like Tesla's energy business potential as well. One thing that I really liked from the earnings call is that Elon said that Tesla's new Megapack factory in China could double Tesla's Megapack production, or maybe even triple, not just double, triple potentially. And check this out. We see potential for the Tesla energy business to be worth more than the auto business. Morgan Stanley before wrote that selling one Megapack is basically equivalent to selling 100 Tesla vehicles in terms of profit. The margin when it comes to Tesla's energy storage deployments is about 2x that of the auto business right now, by the way. And look at this optionality on new expressions in AI and autonomy. It is increasingly clear to us that the commercial opportunity of non-auto expressions of embodied AI is likely far larger and faster adopting than that of autonomous cars. We believe the humanoids opportunity is far bigger and faster adopting than autonomous cars, and will see a greater quantum of capital behind it. Tesla is at the epicenter of the theme. Investors may need to add new tabs to their Excel models. It's mind-boggling how fast FSD is getting better. And now Morgan Stanley says the humanoid robots, that business may actually start making money perhaps sooner than the FSD robotaxis. Maybe. I mean, they're not saying it outright specifically about Tesla, but they are clearly hinting at that. And it's clear that if Tesla solves FSD, makes it safer than human driving, Tesla stock is going to do tremendously well. But if we also add the humanoid robot, the numbers get so big, it feels inappropriate to say them out loud. It feels like I would be doing something wrong. Although they say we believe near-term expectations around FSD and robotaxi may be too high. And then Morgan Stanley basically says that investors are expecting too much when it comes to autonomous technology by Tesla deployed in China. But Elon recently just said that he is going to ask for regulatory approval of FSD supervised in Europe and China, and he expects that to happen before the end of the year. EV winter may be prolonged and could still require further steps to mitigate further potential losses. Other governance considerations, Elon still does not have 25% blocking minority of Tesla. Although if Tesla invests into xAI, that to some degree gives Elon a little bit more power over Tesla as well, somewhat indirectly. If we include the 2018 compensation package, this should take Elon Musk to 20% in terms of voting control. So he would need the extra $40 billion to $50 billion gap in voting stake to bridge the gap to 25%. I think Elon Musk and the board already have a plan for that. I'm not really worried about that. It will probably be a somewhat similar compensation package to the 2018 compensation package, just except giving Elon economic benefits, it will be just purely focused on voting control is my guess. By the way, what happened to Ford? It dropped 22%? Who would have thought that selling EVs at a loss could negatively affect the stock? I would really not want to be Ford right now. It looks ugly, and investors are seeing it now. Maybe Ford should just license FSD from Tesla already. By the way, on the earnings call, Elon did say that Tesla had discussions with multiple OEMs. He was very vague about the details, but some of these companies seem to be interested in Tesla's FSD, and I assume that Ford is among one of these companies that at least had some discussions with Tesla. And one thing that Elon mentioned was that Tesla is now looking to license FSD to, let's say, just a fleet of 10,000 vehicles from another OEM. It would have to be a big number. So probably one of these OEMs wanted to just strive with 10,000 vehicles, and Tesla said, no, we're not doing that. But if I think about it, if Tesla accepted a smaller deal like that as well, I think that would still drive the stock significantly higher, because it would start to signal to other investors, hey, look, these companies, they can't figure it out and they are coming to Tesla. And this is quite impressive. This is an hour through LA rush traffic, completely hands-free with zero interventions on 12.5. This is not San Francisco. San Francisco is where it really is quite a bit better. LA is better than most other places, but it's not San Francisco. So this gives us a better idea of how it actually performs, and 0 interventions. Again, of course, it's not perfect, but it's much better. So many people are saying this is the best version yet. And here's something really important. Pay very close attention. Whenever I find myself in a complicated, stressful driving scenario, or I just want to get there smoothly, my natural instinct is to disengage FSD and handle it myself. When this flips, I will become bullish on FSD, and it just flipped for him on 12.5. He prefers to drive it on when he wants to have a smooth, nice ride. I have seen a few people complain about this version, but when it comes to highways. But that's obvious, it's not end-to-end yet, so ignore anyone that says anything about highways. The stacks, though, are going to merge soon. And because supposedly this version is so good, you might actually see smart someone with this FSD version. It's crazy how many people I see speaking positively about 12.5. It really does feel like something big happened. Here's also more good news. There will be several point releases in quick succession. So soon we are going to see 12.5.2 and then 0.3 and then 0.4. AJ thinks that quick succession suggests that Tesla's FSD team is split into different units focusing on different modules or problems and feed their solutions into the overall FSD software stack. And at 12.5 is really that much better, then we should see a lot more people starting to drive a lot more on FSD, and Tesla should also give everyone another free trial of maybe 1 week, 2 weeks, or 1 month. Didn't Elon say that the limiting factor for improving FSD is having more intervention data? Well, if you have more people using FSD, you get a lot more intervention data. I like this chart. This shows that Tesla's FSD miles increased 3 times in Q2, quarter on quarter. In Q1, we only had 212 million miles driven, and in Q2, 659. This is a hint that Tesla is going to advertise, perhaps, specifically FSD. Most people have no idea it exists, says Elon Musk. If most people really have no idea, then it would make sense to let people know that such a thing exists. But first, FSD needs to be quite a bit better. And maybe 12.5 is that version that's good enough. My friends that are not techies or Tesla stock investors, and they don't really care much about technology or Tesla stock and Tesla the company, they don't really like FSD in the city, 12.3.6, but they do like using it on the highways. Maybe this version is the one that changes this. Tesla is back to shipping Model Ys from China to Canada. This could be because China is going full tilt production in Q3 to build inventory ahead of Q4 downtime, but maybe they're building slightly too much inventory. To some extent, Troy seems to agree. Oh, this is pretty cool. Tesla's Model 3 Performance Quicksilver colors were spotted for the first time. Look at this. It looks nice. It looks incredible. I think the lighting in the showroom really helps this color shine. Before the new Robotaxi event day, do you think we're gonna have 12.6 FSD? I think the chances of that are pretty high, and maybe it is going to be another step improvement for FSD. And it seems like it's not as simple as just taking a lot of data and just putting it into one model. Tony from Tesla says lots of hard work and many late nights went into the making of FSD 12.5 from across the team. Many ideas were simplified and reworked from first principles. It's a release we are proud of. Before, we wouldn't really see this from Tesla employees. We would only see excitement from Elon Musk. So yeah, this further confirms that this version indeed is very special if you haven't tried it yourself yet. I see quite a few people saying that Hardware 3 maybe is never going to be capable of Robotaxi because it's just not going to be good enough. As a consumer and as an owner of a Tesla vehicle that has Hardware 3, I don't like this. But as an investor, do I care about this? Not really, because what matters is that the problem is figured out, and investors look at least at the near to medium future. And if it's extremely clear that Tesla is already able to produce vehicles that are capable of full autonomy, I think that stock would immediately go up way up. And give it another 2-3 years, and Tesla's Hardware 3 will no longer be the most common hardware deployed to Tesla's vehicles. But Elon personally believes that hardware 3 will be capable of full self-driving. I'm just giving you the worst case scenario. And to me, the worst case scenario sounds just fine. What is abundantly clear though is that hardware 4 has a lot of unlocked potential. Also, with large language models, we have seen that some smaller models can actually beat some bigger models. It is definitely harder to do, but I'm just saying it's possible. Bigger isn't always better, but usually it is. Here's another place where Tesla is offering good financing deals. Tesla also signed contracts with Australian insurers aiming to cut costs for customers, which is great. Oh, and by the way, did you see this? It's not just Ford that's down. GM is also down 10% in the last 5 days. Gary says the main reason why Tesla stock was down on the earnings day or right after that was because of lower than expected auto gross margins, excluding regulatory credits. Research directors will not permit Tesla bulls to pump a stock by only sharing positive views. Institutions who own Tesla need to be able to articulate both the positives and negatives, and Morgan Stanley's Jonas spends considerable time sharing the risks in owning his favorite names. This post is from yesterday, and today already Morgan Stanley named Tesla as its stock pick. Nice. So that's how much risk Morgan Stanley sees in Tesla right now. I am going to bookmark this post from Gary, and I'm going to set a reminder for myself, something like 10 years from now, to see how this aged. Many Tesla bulls who are focused on the amazing progress of FSD are missing the key driver of the stock, which remains auto gross margins excluding regulatory credits, and which hit a new 36-month low in Q2. Until management addresses the gross margin issue, they spent all of 30 seconds on it on the Q2 earnings call, Tesla's stock is likely stuck. I fully agree that Tesla is not a car company, but EVs generate 80% of Tesla profits, so it's still the elephant in the room. After the earnings were released, Tesla stock is still down, but it's going back up. Anyway, if you do care about short to medium term performance, I think looking at the automotive gross margins is definitely important. And sure, earnings matter in the short to medium term, but in the long term, like Elon Musk said on the earnings call, if you believe that Tesla will solve FSD, you should own Tesla stock. If you don't, he said sell Tesla stock. But clearly many investors are happy enough with the EV business and everything else that Tesla has. And some of them don't mind owning Tesla stock, even though they might think, FSD, it's not really going anywhere. When it comes to earnings predictions, James actually remained #1 retail analyst in the Tesla stock community, beating Wall Street by quite a bit. So James has a lot of credibility about this. Pretty sure auto gross margin hasn't bottomed. But then a few days later, he explained this will actually depend a lot on what other actions Tesla decides to take as the quarter progresses. Now, if FSD V12.5 is really that much better than 12.3.6, if Tesla wanted to increase its sales, and if Elon got really serious about advertising, I think at this point, it wouldn't be too hard to make it work. You just show how well FSD does, and so many more people will want it, especially if you make it much better on highway. I actually just spent hours and hours and hours driving on the highway, and I think in the city it's better. I had issues with FSD, even trying to find the right exit. You had to be very aware where the exits were. If you were not, likely you would have had an issue, or you would have slammed on the brake when you realized last second that, your exit was right there, or you would have just missed your exit entirely. Usually it gets it right, but often enough it doesn't. Keep in mind, this is on 12.3.6, and I drew through the Washington State, Oregon State, and California too. But after the stacks are merged, I believe the highway driving is going to be vastly improved. That's it for this video. Make sure to like and subscribe. My shoulder is feeling better, so the trip was definitely worth it. I will still definitely need some time to recover, but I'm heading in the right direction, so I'm happy about that.